Mohnish Pabrai is betting big on coal, especially on metallurgical coal. 3.7% of the company is owned by individual insiders. They also have almost 3 times more cash than they have debt. This industry may have a very bright future. Mohnish Pabrai added over 200% to his position in Arch Resources in the last quarter, and currently it makes up 15.72% of his US portfolio. So let's try to understand why he believes that this company can be a great investment, and let's value it to see if we can still join him and make a lot of money as a result. Arch Resources, formerly known as Arch Coal, is an important player in the global coal market. It operates in 2 segments, metallurgical coal and thermal coal. Recently, I made a video analyzing Warrior Met Coal, another of Mohnish's investments. The difference between them is that Warrior concentrates only on metallurgical coal, while Arch Resources is more diversified. If you were to invest $1,000 into this company when it resumed trading after emerging from Chapter 11 bankruptcy in 2017, and thanks to that they managed to erase almost $5 billion in debt, you could buy around 16 shares, and now they would be worth something close to $2,953. And this company also pays dividends, so in that time you would get $682 as dividends. So if we add together the current value of shares and the dividends, we get $3,635. And that is a gain of 263% in less than 7 years. That is a very decent result. Individual insiders, that is a check. 3.7% of the company is owned by individual insiders. And we would like to see this number over 2%, so that is very encouraging. We see that the management has its skin in the game, so they should take good care of the company and its shareholders. And are they buying? That is an X. We see only sale transactions in the last year. In that time, insiders sold shares worth around $8.5 million. And do super investors own this company? That is a check. Mohnish Pabrai owns 1.3% of the entire company. And he is buying right now. Like I said before, in the last quarter he added over 200% to this investment by buying almost 235,000 shares. Return on invested capital, that is a check at 23.2% 10-year median returns. And we want to see this number higher than 10%, so that is a very nice result. And what do we know about net profit margin? It is a check at 14.7%, and the industry average is 10.2%, so they have a little bit more pricing power than an average company in the industry. And now let's take a look at share buyback. It is a check. In the last 10 years, they bought back 12.6% of shares. Unfortunately, since 2021, they issued a little bit of shares, but in the long term, it is all good. And the debt, it is a check. It would take less than half a year to pay the long-term debt with a 5-year average free cash flow. With a current free cash flow, it would look even better. And they also have almost 3 times more cash than they have debt. So they have a very impressive financial health. Revenue growth. It is an X at 0.4% 10-year compound annual growth rate. And we would like to see this number higher than 10%. So revenue is stagnant. But we have to remember that it is a cyclical industry, so it really depends when we pick our starting point. And free cash flow growth, that is a check at 13.4% in the last 10 years. And we would like to see this number higher than 10%, so that is a nice result. And earnings per share growth, that is an X at minus 11% in the last 7 years. And before that, they were not profitable. That is why they had to go through the Chapter 11 bankruptcy. But like I said before, it is a very cyclical industry, and it also shows here. If we would look at the last 6 years instead of 7, the result would be a 16.7% growth. So such metrics with cyclical industries can be sometimes misleading. The dividend yield is 5.4%, so that is a nice yield. And the payout ratio, that is also a check at 44%. And we want to see the payout ratio somewhere between 20 and 50%. So that is very nice. We are getting a big but sustainable dividend. And what about dividend growth? It is an X at minus 9.5% 5-year growth rate. And what we have to understand is that this company is using a hybrid dividend policy. So they are paying a small and sustainable dividend, and when the business is doing great, then they pay a special dividend, distributing a part of its earnings to the shareholders. So even though the yield and the payout ratio look great, we have to understand that in this case, we just don't know what dividend we can expect in the future. Price to earnings ratio is just 7.6. So this company looks cheap, but let's value it using a discounted cash flow formula. We will have to estimate the growth of Arch Resources for the next 10 years, and we will make 3 scenarios: low, medium, and a high one. In the low scenario, we will estimate a growth of 2% for the first 5 years and then 1%. In the medium, 5% and then 4%. And in the high scenario, 6% for the entire 10 years. So the low scenario predicts a very slow growth over the next 10 years. Medium is close to the estimated growth of the coal industry, which is 5.3%, and the high one is predicting a slightly higher growth than most of its competitors. So, with such estimates, the intrinsic value in the low scenario is $200, in the medium $246, and in the high scenario $271. But we have to always apply a margin of safety to those prices. I use a 30% one, and with such a margin we get in the low scenario $140, in the medium $172, and in the high one $190. And the current price is around $184. So this company is somewhere near its fair value. Mohnish Pabrai is betting big on coal, especially on metallurgical coal. His top 3 US investments are Alpha Metallurgical Resources, Arch Resources, and Warrior Met Coal. So it is a bet not on a specific company, but on the whole industry. And thermal coal may eventually be replaced by other cleaner energy sources. But so far, there is no substitute for metallurgical coal when it comes to manufacturing steel. So this industry may have a very bright future. And Arch Resources has great financial health, and also, what I really like, is the fact that the management has its skin in the game. Unfortunately, its growth is very disappointing, but of course it is a cyclical industry, so it depends at which exact period of time we are looking at. So maybe it's not a major issue after all. The valuation seems pretty fair, which is nice, but remember that in case of a cyclical industry, we really have to understand at which part of the cycle we are. And the price of coal is almost 70% down from its peak in late 2022. But how long will it take to push the price up? Well, that is a question that a lot of investors would like to know the answer to. If you enjoyed this video, you may find my analysis of Warrior Met Coal interesting, and it is another new investment by Mohnish Pabrai. Thank you so much for watching, and see you in the next one.